And guys, look, if you're enjoying the discussion, feel free to follow the moderators that you most resonate with. And if you enjoy discussions like this, we actually do this Monday through Friday at 3 p.m. Central, 4 p.m. Eastern. We want to shift the discussion here. It's been a really great discussion on inflation, but we want to touch on the meme stock mania and the crypto. Crypto has seen a recovery. We saw Bitcoin at some point up almost 11% today, and meme stocks took a little bit of a, not a little bit actually, in some capacity, a significant decline for the day. We saw Clover Health trading at $16 after market, down 28% for the day. Would love to hear people's take. What do you take in general about this meme stock mania as crypto recovers here? Is this squeeze of stocks going up 100% in a week, and the social media sentiment of Reddit communities pumping stocks, is this here to stay? Are we going to see some regulation? What is the people's thoughts?
Gary Gensler's already mentioned that he's looking at regulation, so I suspect something's coming. I don't necessarily think that the crypto meme stocks, which are, like Shiba Inu, Doge, things like that, are directly related or correlated in some way with the meme stocks like, Clover and that prison company that they're doing now. And is it Wendy's? Whatever. I mean, those are the thing that I find in common is now we have investors with direct access to purchasing in markets, and they have the same amount of education and information on how to select and what investment is based on, and what the consequences of investment are, what the numbers that markets show mean. All of that is abysmally low. So the only way, if people want to get involved in a market, they hear investing is good, you should invest. That's how rich people get richer. And then they say, okay, well, I can sign up on Robinhood or whatever, and then they go and do that, and then they have no idea what to get. And they're relying on social media. All of this, in my opinion, is not great, right? Because it's not really financial education. People aren't buying stuff that they understand fundamentally and therefore can ride out highs and lows. What they're doing is branching out in herd mentality. So initially, the herd mentality was really just looking at the numbers. Oh, I see this number going up. We're all going to go into this number going up. Now we've got more organized things in Telegram rooms and on Reddit and in Instagram and Twitter that are all working to do more or less orchestrated pump and dumps, right? Except that the people involved don't all know that they're part of one. And this is really problematic in so many ways. First is people are taking the small amount of money that they have and putting it into a market because they're trying to build a financial security because of the discussion we just had. Wages are stagnant. The economy requires fewer and fewer people to run it, which means it has fewer and fewer people who can benefit from it. So people see their jobs disappearing, their livelihood disappearing, and their dwindling. So what do? They hear, okay, and don't want to ask questions because I don't know. I think that they are nervous of appearing, too stupid or something like that. And the second is that now they have access where previously that access was regulated by people who were regulated by government entities. And the problem is all the tools in the marketplace still reflect that oversight of people who are knowledgeable and qualified to be in the marketplace. So there isn't like a plain English version of the marketplace. They just have the same marketplace when only registered broker dealers and market makers were the ones who were actually manipulating anything. So, and then there was a clear punishment for people who were going to manipulate the market. Well, now we have these unregulated parties that are going in and manipulating the market with people who don't have the training or education to be investors. Part of this in my soapbox is always that there is no financial education in America, at least, and it is a tragedy because all that happens now is that people who are rich learn from other people who are rich that are in their family, and they learn how to preserve and gain money. And people who are poor only have other people who are also poor and don't have that education to teach them, and they can just say, this is where, and this is an extreme example, but here's how you apply for snap cards. That doesn't do anything to have the people who are uneducated, it doesn't do anything to make them more financially secure in the way that people who are very wealthy judge them poorly for, right? They say, well, you just don't, it's not my fault you spend money on shoes instead of or disposable items instead of stocks or whatever. But shoes they know, so stocks they don't know, and nobody's teaching them. So this is problematic, and we're going to continue to see meme stocks rising, I think, until something is done either in a regulatory sense, which I don't know is the right answer. I think that people who are clearly orchestrating pump and dump should be considered regulated, but the people who are following along don't have other tools. So, until either there's regulation and that pushes them out of the marketplace, or there's actual education, which would be, of course, my preference. I think we're going to see more and more of this, and we're going to see these roller coaster marketplaces, because it's all driven by leverage and herd mentality. And in crypto, it's worse because it's thinly traded. So you have basically every purchase and sale has an outsized impact because there are so few people in it. So I think there's a lot of forces here, but none of them are being addressed. Just like the same issue of, if you have fewer people that run the economy and fewer people that benefit from that, that trend is only going to increase. What are you going to do with the rest of the people? Our population's still increasing, so I'm not really sure that there's a plan out there other than please, please, please let me be the person that gets to have the benefit of the economy. These are all things that are all symptomatic of the same basic thing, and I don't see people addressing the real problems and natural outcomes of the way that we treat money and jobs, and the way that we separate out the people who run companies versus the people who work in companies. I think there's such a disconnect, and I'm not like a bleeding heart anything. I mean, I ran a manufacturing facility with 30 employees, and it was eye-opening, honestly. But the difference in the way that people understand their role in an economy and their ability to act and to grow money is so incredibly different. But I definitely understand the inclination to get rid of people and to automate as much as possible, because the hardest thing about any business is the people. So anyway, all of that's I definitely think it's going to be progressing.
Yeah, some great insights there, Alexandra. If you are enjoying the discussion, do give some of the great speakers on stage a follow. We've had some great insights already. We've discussed the inflation print tomorrow. Now the conversation's switched a little bit towards crypto and some of the meme stock rallies. I want to strong. He's talk just then just mentioned that he thinks there's a big disconnect in terms of financial literacy and education. Dr. Shiller, what are your thoughts and education? Dr. Shiller, what are your thoughts on, I guess, the volatility that we've seen in some of these crypto assets over the past couple of months, and on the space more broadly from an education point of view?
Well, from an education point of view, when I open up my rooms, I keep it Bitcoin based. So sometimes people will come in and the only thing that they've heard about is Doge. So they'll come in and they'll say, well, not anymore, but they'll come in today and say, what do you think about Shiba? They'll listen to everything that you're saying. In those fundamentals, they don't understand the importance of them yet. So education in this space is super, super, super important. So if you're talking to anyone and they're telling you about any particular coin, it should always be that question: what do you know about it? Comparing this to the other things that you're putting in your portfolio of assets. What does this mean? How does this reflect upon the person that that you are fundamentally? But I think that there's a huge space here for education, and I think it's a great time to be in the space as an educator, because we really, really are needed here.
Sure, thank you, Dr. Shiller. I'll move to David as well. David Alorca, welcome, David. It's been a while. I've not heard your view on the action markets for a while. Have you been trading? What are your thoughts on some of the meme stocks and the equity markets more broadly over the past month or so?
Hello, everybody, and hello, Rahel. Thank you so much for popping me up here. Yeah, it's been a while since we've hosted a room. We used to host a room twice a week, every Monday and every Sunday. Sorry, every Sunday and Wednesday during the week. But now we've moved to slightly more ad hoc stuff and supporting the rest of the community within our Telegram group. The marketplace, obviously, for the last, I was literally having a conversation with my trading partner Rakeem today. The marketplace over the last 6 months has been very, very. It's been quite strange, I should say. We were both talking about the fact that if people entered the marketplace for the first time, if people entered the marketplace for the first time in the January period, right now, all those people that have entered in the January period for the first time, their portfolios are probably looking like it's red at the moment, because all of the hot stocks that were spoken about during that period, all of the boom that was going on during that period, that at the tail end of the bull run, fell off the cliff. And we're both looking at portfolio analysis and not only looking at our stocks, but also quite a lot of other people, quite a lot of other people's portfolios that we help to manage, and just looking at how the stock market has changed and developed and grown over the last 6 months, over the last over the first half of this year. Sorry. The unpredictable nature of it, but also the return of some of these stocks that some people also believed weren't going to have any further legs going forward. Obviously, right now there's a lot of craze being spoken about with meme stocks and volume-driven stocks and stocks chasing highly shorted companies and the like. So it's been a very interesting period. It's almost like Groundhog Day with regards to what occurred in February, March, and is currently happening at present. But it's just been good being in the background for a little while, just listening to what other people's thoughts are on the space. To be honest, for me personally, what I've been doing, I have been for the first part of the year, I think from March and April, I spent that period of time building up cash reserves. I do some other stuff outside of trading. I'm a TV presenter and sports presenter, so I've just been building up cash reserves because of the volatility of the market, waiting for a period of a bit more stability then in order to re-enter and consolidating my portfolio as well. It was far too wide, and I know Rahel's got a very disciplined portfolio management strategy that he uses. But I was spent that period of time consolidating my portfolio, coming into a smaller portfolio size just on the basis of manageability because of my time. And currently, right now, I'm looking to cycle out of cash and into the market a lot more at present. I know that was very, very, very long-winded, but yeah, that's what I've been up to.
No, thank you for sharing, David. And good to see you here again. And I'm sure I'll see you like somewhere on TV talking about the Euros. You here again, and I'm sure I'll see you like somewhere on TV talking about the Euros over the next month or so. Habib, you are mic'd. Did you want to chime in and add something?
Yeah, just two things regarding Samir on the meme stocks. Actually, 3 days ago, from the Fox News, it came out the SEC has been moving and putting sharp eyes on the meme stocks. In fact, they're trying to impose the Reg B, which is regulation best interest for the client side, from those sort of Robinhood brokers and etc. I really think, as what I would definitely agree towards what Alexandra said, this will continue for a certain time until it slowly will be shut down, because again, it's not a penny stock market. It's not OTC, over-the-counter market. This is an actual exchange place where, again, AMC is not a meme stock and shouldn't be called as a meme stock. If it's a meme stock, then it should be out from the exchanges itself. Therefore, we surely will be seeing step-by-step regulations towards what's happening, either impose buffers into it. We're not really sure how they're going to do it, but there has to be a way, because this is hurting the entire market itself. Step by step, this could be increasing, actually. It could not just be limited to AMC. It could not just be limited to GameStop. This will actually affect the market in the long term. Just also, second thing regarding inflation, I just want to highlight a quick output in here. The increase that we have seen, we have never seen it since 2000, actually. Not even back in 2008, it didn't happen. Back even in dot-com bubble, it didn't happen. And what is it? It's the increase from month to month. So March was 2.6 and April was 4.2. That is a 61% increase. We've never seen that figure. Are we seeing 4.7? Because that's what rumors are passing by for the upcoming month. It's possible. We don't know. But it's extremely critical to see this going on. I do believe even till June, I think Shahid, Shahid is still here. So till June, yeah, this will get more clear. However, if these prices continue to increase on a massive figures, I think that is just gonna look way scarier. I just want to even close off a topic. I mean, let's look at the beverages or even the products the people that eat on a daily basis. Meat has increased 10%. Corn has increased 50%. In fact, even Cheptol, the restaurant, has said it will increase its prices by 3.5 to 4%. So these prices are increasing. Everything is increasing in the economy. What I need to consider are the wages that are being paid. Do they cover on this inflation growth? Are people's salaries also increasing, or wages also in growth? Are people's salaries also increasing, or wages also increasing in parallel with the inflation? If not, I think we're in a, I wouldn't want to say a questionable state, but the wages do have to increase to be parallel with the growth of what we're seeing of this inflation. Just to close it off,
Add one
I'm
thing.
questioning.
I,
Yeah,
I,
go.
I think you have to add, I mean, remember, when you're looking at those monthly numbers, you referenced .com and other periods, you have to realize that the environment we lived through between March of last year, but primarily April through July of last year, was effectively global economies coming and grinding to a halt in many layers, right? Like facilities, manufacturing facilities, employment, a lot of this stuff ground to a halt, right? And so what happened simultaneous to that was consumption ground to a halt. So when you look at these year-over-year numbers, they're going to look very high because of the state of the economy. Even in 08 and 09 during the financial crisis, activity like this didn't grind to a halt. It did last year, a lot of facets of the economy. And so what you're dealing with is imagine, so the scenarios are quite interesting. When we think about what happened last year, we effectively shut down the economy. Like we brought things down to a level where restaurants weren't open. Like stadiums were closed. I can go on and on about all the various venues that just didn't even operate. And of course, all the employment with that was zero. And then what you've had since then are a number of things that happened exceptionally fast, right? You've had a tremendous amount of fiscal stimulus that's also being supported by monetary stimulus, right? You've had, right. You've had the vaccines, which have brought about a normalization and a return to activity much faster than anyone could have anticipated. Like there was assumptions about getting a vaccine by end of year. There was not a lot of assumptions that we could get to these numbers as quickly as we have in the US. So converge the idea that you've got a ton of people who are vaccinated and now enjoying normal activity, who've also been supported by tremendous amounts of fiscal stimulus. And do that in an environment where a lot of the activity, not just last summer, but as recently as Q1, was effectively at a dead stop. And then shove all that through at once. And so that's what you're doing, right? If you're a restaurant owner and you're like, look, I've got to survive and I've got to make up for what I experienced last year, you're probably going to naturally increase prices anyways. But at the same time, I need to be moving. I can't wait for this all to happen. I can't wait to employ people. I've got to start paying them now, right? So there's a bit of business methodology about like, I've got to start doing this now, and the only way to really do it now is to pay people more. But again, the lens, it's unfortunate the way people look at the world. It's like Chipotle is determining inflation. In aggregate inflation, how much does Chipotle represent, right? Think about your worker base. Think about where 90% of your workers are, right? They're not seeing their wages go up. Your school teachers, your firefighters, your police officers, your people working in a tech company, your people working in financial services, their wages aren't going up. We're all talking about waiters, waitresses, et cetera. Yeah, they're going up. But again, we seem to be very willing to magnify the areas where there has been some inflationary supply chain issues, and we neglect the other 95% of the economy that was really smoothly, right? So don't over extrapolate those micro elements, those microeconomic elements into the larger economy and get fixated on it, because we can all talk about and quote numbers on commodity prices and material prices, and and I went to Walmart and guess what, basketballs are 20% more expensive. That again, we're so focused on these little things and we're not looking at the larger picture, and that needs to be the way that the market and investors need to look at the dynamics that are affecting the market currently.
Yeah,
I
it's
would
a
just say
great
that
point.
the higher end wages and inflation is anecdotal, but at least in the worlds I'm in, my friends who are in big law, these firms are paying huge retention bonuses to keep people from quitting. And part of that might be people are especially unhappy because of the pandemic. And as with the sort of lower end wage workers, it's hard to disentangle that from, do folks not want to go back to work because they feel unsafe, or there are new challenges, with childcare at home, or stimulus. And on the higher end, it's are people more miserable and they're looking at their friends getting rich on Dogecoin, and they feel worse about their jobs. But I can also tell you the startups that I help raise money, those valuations pretty frothy right now. So I don't think it's fair to say it's just isolated to a couple areas.
Yeah, I'm gonna say it is, because when you actually look at the wage data that comes out, there's tons of look through on the data of what's happening, and this idea of massive retainer bonuses going around in law firms, and this is, again, I think people are emphasizing, like, there's not a lot of people looking at their neighbors being like, oh, you made a bunch of money at Dogecoin. That's just not happening. Like, we have to make sure, again, that narratives are articulated with fact and not with suggestions. Like, there's no evidence of, high-end labor, white-collar labor, having to spend tremendous amounts of money to retain labor, and are seeing actual increases in wages that are above par. If you can show me the evidence of that, I would appreciate that, because that's not circling anywhere.
Well, let me look for
Yeah,
that. There was a New York
just
Times article on
just
it recently.
yeah, just to cover one thing. So again, a restaurant, or to what you said, wouldn't make any sense. No, we're talking about the overview, the entire commodities market. So just to put an example, a scenario, right? Let's just say the tomato that goes from the farm to Walmart. Now it will cost a different price because as oil has increased, right? This is commodities. The entire commodities market is in a massive bullish run right now, and we are seeing that. So the farmer has to adjust his price, right? From, let's just say it was $1, and now it has to be $1.30.
Yeah, but you're missing
And
the
if
point.
we if we're
Is it structural?
it,
Like, are we going to be dealing with even higher tomato prices next year? Can you answer that question? That's it. Answer that question. Is
so
it
the wages,
structural?
well, for now, no, it isn't. But for the wages of people being able to cover up all these minor expenses, that's just, tomato increasing 10%, sugar increasing 50%, meat increasing 10%, all of these are increasing, yet the wages are not increasing. That, I think it's going to be a slight of an issue because let's actually look at last year. The wealth gap has also increased. The wealth gap, money is being concentrated more uh, to the rich people, if I would want to put it that way. And so that creates a I wouldn't want to say financial issue, but a questionable issue of how is the consumer price index, again going back to the CPI, are we seeing these prices increasing?
Yeah, but you
I don't
also,
know.
again,
Yeah,
you're taking, when you think about the data, let's also not look at the fact. We're avoiding the fact that people got stimulus checks 3 times, and that basically and wanted to consume aggressively, right? So activity around consumption can't be neglected, right? Like when people and there's a lot of evidence that this money went to areas that wasn't necessarily intended for. I mean, high-end handbags, the sale of electronics, it went into various ways. So again, when you're examining data, getting caught up in the short term, we just came through a material amount of fiscal stimulus that was pumped through to consumers. And when we round trip this in a year, one, will consumption behavior still maintain its profile? And two, will it have the same effects? Again, when you think about commodity prices, whether it's lumber, tomatoes, eggs, and you can go down the line of all the stuff that we're talking about. Will this be a persistent issue, meaning that in a year or 2 years from now, will not only will they stay at flatline, but actually go up 3, 5, 10% again? That's where you have that has to be the framework for inflation. Inflation is not a function of, again, a convergence of issues that are creating these prices in the interim. It's about, are there structural issues that mean across the board commodity prices will go up again next year, not level off, but actually go up, because that's what you need. Will wages not just go up now, but will need to go up again next year and the year after? Will wages not just go up now, but will need to go up again next year and the year after? Like, ask yourself those questions. Are the forces in play right now where everything that we're talking about that's inflationary and perceived to be inflationary, are they actually going to go up again next year? And are there structural issues that mean that we're going to be dealing with persistent rises in costs of these goods, not just the next year, but the year after and the year after? If you can make a case for that, you've got persistent inflation. You got something that's more structural. If we're talking about the convergence of stimulus and coming out of a period where economically the world was on lockdown, again, think about what that does when the developing world and big parts of the world start to normalize activity, can increase production, can actually normalize trade activity, where ports are unclogged. In a year, if we're in that situation, do we see these same issues arising? That's the question you have to ask yourself. And again, there's absolutely no evidence that points at that. Until someone can prove that these things are going to be persistent for the next couple years, there's no way to get ahead of this and just suggest we're going through inflation. Again, the amount of money being thrown at the system coming from a dead halt economically is going to make everything look inflationary. It's very reasonable to be thinking that inflation is going to be hot for the next several months, right? If this was truly persistent inflation, well beyond what we're going to have over the next 3 to 6 months, trust me, the activity in the markets would not be like this. There would be a lot of evidence underneath it that would be far scarier than what we're seeing now.
Yeah, some great insights there. And we're just discussing inflation because, of course, we've got an important data point coming out tomorrow, big catalyst. Been really rich discussion so far. I want to pass the mic over to Ryan and Zach and Alexandra to comment very briefly, I guess, on El Salvador and the fact that they've made Bitcoin legal tender. So why don't we start with Ryan, because we've been waiting patiently, and then move to Zach and Alexandra. Ryan, over to you.
Yes, yes, yes. Thank you, Ruha. And if I could just speak to something that Alejandra or Alexandra, I apologize, mentioned earlier, is that my push in this conversation, which we tend to focus a lot on what retail is doing, is for these loopholes to also be closed. You know, S3 Analytics, during a congressional hearing, data was used by them to say, you know, GME was shorted at max 141%. And if we understand shorting, which I'm pretty sure all of us on stage do, how could that happen, right? There's some aspect of it that's naked shorting. And if there's naked shorting involved, we know that that's illegal, right? So then there's manipulation that is happening by institutions and things of that nature based upon time frames and different things, right? And I mean, hopefully everyone can agree with that to some extent. So it's not just retail investors coming together, banding together and doing certain things. It's also another catalyst or reason that is there to helping facilitate these things. We know short squeezes and stuff has happened in the past, but definitely not to the extent that is being publicized now, which I would concur with Alexandra is really dangerous in this space. And I will also submit that a lot of these people are getting in, they do understand that it is a pump and dump, but euphoria, right, and FOMO keeps them from exiting their positions because the mindset then shifts to, oh, this thing could keep going, this thing could keep going, this thing could keep going, right? And then you have the last fool or the greater fool theory that comes into that space. So I just wanted to, provide just the backside to that. And yes, there are regulations in place, but just because there are, that doesn't mean that people are following them and or that they are fully enforced, which this situation points to previously. The last meme stock situation was a little bit different. There were gamma squeezes involved versus short, but that's beside the point. El Salvador, really important in terms of what was their legal currency since 2001, none other than the US dollar. This is a small system, though. We really have to see how is it implemented. We can't get too far ahead of what is happening, but it's some sort of positive news in the space and could potentially provide framework for other sovereign nations to get into space. But again, I'm not trying to get too far ahead of the headline simply because until it's really implemented and we can see it and see how things are going to move and react, it isn't 100% solid, but it's historic in terms of the laws and regulations that are coming in place. Hopefully, it allows the U.S. to be a little bit more favorable as well as clear around how crypto is going to be. It allows the U.S. to be a little bit more favorable as well as clear around how crypto is going to be taxed and how it can be used and some other regulations. This is Ryan. I'm done speaking.
Yeah, there's a lot of problems with El Salvador, and I just got I was just in another room discussing this, and someone invited a bunch of Bitcoin maxis into the room, and you can tell how that went. I don't know if you were just in that room, and
I
it
mean,
was yeah, it was
yeah, I
Saw the
mean,
fallout on
interesting.
Twitter. Yeah.
yeah,
Yep.
yeah.
So, but out of that, Brock Pierce follows me now. So that there you go. Hey, Ali. So this is the problem, right? Is first we're looking at a country that has already they have a broken economy because they pegged their fiat became the dollar in 2001, and the problem with that is that of course they're basing their economy around a currency that is based on an economy that is completely different from theirs, right? So that's why pegging never works and it's always breaks. And this is what happened to them when there was inflationary pressure. They lost about 25% of the value of the money that they had at the end of all of the stimulus plans, right? But that is not because it was poor management of the resources there or whatever. It was literally like we were making decisions based on stuff that was in our country and related to our currency, and they had fallback. And there is no way that the government can also account for all the other countries that are using the dollar as as the legal tender or the tender that powers the secondary economy or the black market economy. That's just not the role of the Fed. It's already hard enough to maintain a currency. The biggest problem is that Bitcoin is not a currency. It is the opposite of a currency. It is a store of value. It does not maintain a consistent value over time. And that is what a currency is. It has to be predictable. I have to know that what I promise you that I will pay you at the end of your year of work is going to be fundamentally the same amount at the end of the year, a predictable amount as it is at at the beginning of the year. If I contract with you for $10,000, I need to know at the end of that year that that $10,000 is about the same value it does at the beginning of the year, so that I can work with a predictable number. If I contract with you for 10,000 Bitcoin, at the end of the year, it could be worth $50 or $500,000. One of us gets screwed in that process, and that is problematic. That's also symptomatic of something that is not fundamentally a currency. Now, this Bitcoin beach thing that is happening in El Salvador is, you know, I'm someone from Latin America, right? My family is there. We had also a very charismatic, authoritarian populist that came in and, with all these ideas, some good and some bad. Because remember, Mussolini still made the trains work, even though he was killing a ton of people, right? So let's not lump in whether or not the character of this particular authoritarian government is good or bad based on this one policy decision that Bitcoin people might like. But there are a couple of problems. First is when outside countries and outside entities come into a country and they decide that they're going to fix everything without being part of that economy or part of that country and part of the problems of that country, this doesn't end well. This is colonialism, and it's not great. It doesn't end well for anybody, especially the indigenous populations, of which there is a very large portion in El Salvador. Now, they have a ton of cell phones, but they also have more than a third of the population that has no Wi-Fi and no cell phone. So you're basically looking at saying, okay, well, let's make Bitcoin the currency of choice along with the dollar, right? Two things that are based on economic principles that have nothing to do with the economy of which they are a part. So they cannot control it, they cannot predict it, and guarantee they don't understand it. But now they have no access to their funds. The government has very helpfully come in and said, here, if you can't access your funds, you want to operate in Bitcoin, but you don't have Wi-Fi and you don't have a cell phone, we will very generously hold that money for you. That is not awesome. That is definitely not what people in the blockchain community would say is a plus. That doesn't work with our ethos, and it doesn't really work to benefit that population. It's basically a very fast way to say, okay, well, now you don't have control over the very little amount of money that you do have. The other part is, the prices are not done in Bitcoin, right? So it's not like the whole system works together. So the pricing and the supply chain are still done in dollars and the currency of whatever the supply chain primarily operates in, and they have the option of paying in Bitcoin. Well, of course, that option is going to fundamentally work based on whatever the value of Bitcoin is at any particular time. These are not investors like we are in the US, right? Where we can take money that we're like, okay, it will not be awesome if I lose this money, but it won't put me on the street. I'll still be able to buy food and I'll still be able to buy diapers. That is not the case with El Salvador. They had a horrendous, very ugly civil war that ended in 92. And they've had the same two parties controlling Arenas and FMLN have controlled this government since then, up to this current president, who is from the Ghana party. It's his new party. But this president has also taken his military into legislative sessions to get things passed. That doesn't bode well for an open economy. And there's nothing that has been done to ease any of the financial pressures of the system or include the indigenous and other local populations in either understanding how blockchain works, how Bitcoin works, and how to operate in this new environment, as well as providing them with phones and infrastructure and the ability to operate these things. So, I mean, there's just a lot missing. Coming in and saying, we're going to fix this, let's just go in and we'll give them Bitcoin and that will work. I think it's dangerous to experiment with people, right? This is not, these are not people who can afford to lose a lot, honestly. It's dangerous to go in and say, here, we're going to come in and bring this experimental idea that we have that is definitely not ready for prime time. It is not a currency. We're going to take this stock essentially and make this stock that fluctuates wildly. We're going to make that the base of your economy. Good luck with that. This, I think, has a lot of, there are a lot of problems in there. I think everybody's intentions may be good, but I think that it isn't necessarily well thought out. And I think it's very dangerous to go into another country and say, we're going to decide how you gain prosperity because we have this idea. And if it fails, then all of the nice Americans that are living in this very cheap beach area are going to go home and be like, well, that was fun, we learned a lot. And then what's going to happen? You're going to have people who have like fewer resources are available, and they still have kids that they need to feed. And somebody said, well, it always comes down to the kids. When somebody deals with Bitcoin, it always comes down to the kids. And you know what? It is. And they still have kids that they need to feed. And somebody said, well, it always comes down to the kids. When somebody deals with Bitcoin, it always comes down to the kids. And you know what? It is about that. If you are risking children, it is too big a risk. And that is often what, people who don't have kids are the ones that come up with the argument that, oh, it's a straw man attack or whatever. It's not. This is a legitimate issue that if you don't understand developmental economics and how systems can transform from one economy to another economy with very little damage, or at least as little as possible, and promoting the most benefit for the broadest population, then honestly, you have no business interfering in that economy. And so I'm very concerned about this. This doesn't mean that I don't support Bitcoin or that I'm not an active and happy member of the blockchain community. It just means that I recognize that there are still limitations at this point in time, and that people not taking into account the real risks that impact other people, just like, the real risks of these people who are on Reddit promoting meme stocks. And they don't think of the fact that, well, now I have no life savings or something like that. They don't think of the risks to other people. That is problematic. And I don't know that you can regulate your way out of it, but I do think that we have an obligation to name it, identify it, discuss it, and hopefully dissuade people from it.
So
Alexandra, I have a go on. Yeah,
well, I was
I
going to
have
say,
a
so
question regarding. Go.
I was just going to provide. I see this pretty differently than you do. At a baseline, we've talked in terms before. I share your concern not only about meme stocks, but around the pump and dump schemes in cryptocurrency. There's a ton of terrible behavior, and I would actually like to see our securities laws better enforced in that department, because I agree with the fundamental problem of people, gambling money, thinking they're investing. It's money they don't have to lose, and that can be quite exploitative on behalf of the people who are encouraging them to do so. But I don't know. I was up very late last night in the Twitter Spaces room with the president of El Salvador while the bill was passing, and there were a couple things that gave me hope that this experiment, and I agree it's an experiment, is important and may go better than it sounds like it would. One of which is the perspective that yes, this is an experiment, and yes, this is a risk to some extent, but it's the type of risk that El Salvador really can't afford not to take, right? If we keep having, keep using the dollar and it inflates based on U.S. policy that is not going to take El Salvador into account, that harms them in one way. The remittance issue between the fees that Western Union charges and folks who extort people who get money from remittances, that's another problem. And realistically, a country with the GDP that El Salvador has is not going to be able to dig its way out of this. And so they need to think more boldly. And, this is a calculated risk to really try and change their lot. And I think already we're seeing a lot of excitement. I don't think this is just a couple of, Bitcoin memers who are going to buy a beach house and abandon the country if it's not fun. I think we're going to see a lot of investment in El Salvador. The thing today that sort of lit Bitcoin Twitter on fire is the prospect of using geothermal heat sources in El Salvador for mining. So basically steam pressure from the volcanoes. If El Salvador becomes a mining hub with clean energy, that's great for the country. It'll bring jobs, it'll bring a lot of investment, and will do a lot to prove that the narrative around Bitcoin boiling the oceans and being awful for the environment is fairly misguided. The other thing that the president said last night on the Twitter Spaces that I thought was really interesting is that the monetary policy of the country, if it moves more and more in the direction of a Bitcoin standard, he acknowledges that's not something they can control, and that it's ultimately the Bitcoin community as a whole that's going to set those policies, and that they could have done a CBDC. It's going to set those policies, and that they could have done a CBDC. They could have used the yuan. There are all sorts of sort of innovative solutions that look a lot more authoritarian than using a fully decentralized money. So I don't know. I at least for now, I want to cautiously give them some of the benefit of the doubt here. And undoubtedly, there will be parts of their government that is unsavory, and you might see some bad action by the government. But this is not an experiment at this point that's totally in the El Salvadorian government control, and it gives a lot of power. The bill makes it necessary for the government to provide folks with the infrastructure to accept Bitcoin. So we might see sort of more decentralized progress.
Sure. I'd love to get Bobby J's views and the Bitcoin saga.
El Salvador is a nation in reality, exchange nobody. If I was secretary of the that I would make. On the other hand, countries where they try to make some, they're hearing about whether that diversification is going to turn out to be valid. I don't know, but I do think people will try it. But, if you look at the population of El Salvador and the financial condition of the country, they are the least prepared to jump into an endeavor like this. And, that's kind of, kind of playing with a loaded gun.
I'd like to add to that. I have similar concerns extending more to the population, right? To be imposing something that most of the world doesn't understand, and to say, well, this is going to roll out in a matter of 60 days and you're kind of forced to adapt it. I have concern for the individuals to properly educate themselves, the vendors, and also the lack of transparency as far as how this new financial ecosystem is going to be laid out, and the details of how much the government is going to be involved. Are they going to provide a tiered internet or low latency? How are they going to address some of the infrastructure problems?
Yeah, I think there's some really valid concerns, and I'm of the campus. I'm of a similar view as well. I thought it was interesting that details around the implementation are still quite sparse, and it's certainly going to be interesting to see how it evolves. But look, we've been going for almost 90 minutes. We've touched on various subjects. We, of course, had a very rich and fruitful discussion on inflation. Important data point out tomorrow, of course. Most of the major US stock indexes have been trading in a tight range this week. I suspect, given the importance of that print, as Shahid mentioned and some of the other speakers, it's really going to be important to identify whether the inflation rate, whatever rate we see, whether it's transitory or whether there are signs that it's going to be more persistent or durable. And for the last half an hour, I've been discussing El Salvador and Bitcoin and crypto more broadly. So great discussion. If you have enjoyed the discussion, do give some of them, Daniel, Alexandra, Zach, Habib, Shahid, and various others, and of course Paulina, who's my co-host. We are going to be back at 4 p.m. Eastern time tomorrow, so look forward to seeing everyone there, where we'll dissect the day's events in the market. So thank you everyone for joining, for contributing, for listening in, and see you guys tomorrow at 4 p.m. Eastern time. Thank you, everyone.
Cheers.
Thank you, Raul, Paulina.
Cheers, everyone.
Thank
Appreciate it.
you. Always